You have Jerome Powell's commentary coming in from the Jackson Hole event stating that a restrictive policy until inflation is sustainably lower is going to be persistent, and that inflation is pretty persistent above the trend growth that could warrant tightening, and saying that we will proceed carefully on whether to hike again or not. Fed prepared to raise rates further if appropriate signs that economy is not cooling as expected. So there you go, some amount of cheer actually across the global screen this morning.
Sometimes we are in that kind of a market that bad news is actually good news.
Yeah.
If Fed comes out and indicates in a normal market that they will increase rates, and if it is a huge departure from what your assumption was at the beginning of the year,
then you see a relief rally.
Then you see a relief rally. So that is my point. I guess we are in that kind of a market where bad news is good news. But the ability of the market to shrug off bad news, I think, is absolutely incredible. And it's not just in US markets, it's in Asia also this morning. So the Jackson Hole event has come and gone. In terms of communication, the communication is outright very clear that Fed has not won the war against inflation, and they're committed to bring the inflation down to 2%. My dear friends, if Fed has to bring inflation down to 2%, which means more rate hikes are coming, or economy has to slow down in a convincing manner. But the markets, why are they ignoring that? Isn't that important? Well, the reason why markets are ignoring that is because the undertone now seems to be centered around the fact that the concerns of a recession stroke a hard landing for the US economy that is behind us, which means growth could be the narrative for the second half of the year, and high interest rates in a sense have not really impacted the growth as much as what everybody expected. So here's my understanding, Aisha. I feel that at 4% plus, if US economy is chugging along smartly, and if the growth and if the data points are indicating that things are looking up, then markets are saying that US economy actually can digest, or they managed to digest the rate hike, which everyone thought would actually send the economy into some kind of a tailspin. So if you're a compulsive bull, I'll have to use the word compulsive here. The compulsive bulls are saying that US economy has digested the rate hike. It is still chugging along very smartly. Even if a rate hike comes, the underlying momentum of the economy is so strong that markets and economy will be able to sustain.
Absolutely, and saying that may still be significant further drag from past hikes. That's Jerome Powell's commentary, saying that he does see the July PCE inflation at 3.3% and core at 4.3%. 2% is and will remain our inflation target. So that's pretty much the commentary coming in from Jerome Powell. But yeah, big relief rally coming in across the board. Of course, China has had other measures like a stamp duty cut as well in stocks, which is really powering ahead. The Asia markets, China is holding up a solid 2.5% in the green right now. So those are a couple of moves that are instilling further momentum across the Asian screen. Let's see what the GIFT Nifty is up to. A lot tempered as opposed to what the global peers are up to. But yeah, about a 50-point up move is what it's currently seeing.
Yep, indeed. So it's a healthy handover. But what about the week gone by then? And for the indices, you did see the longest losing streak that we've witnessed since April of 2022. So 5 straight weeks on the trot that we've seen a decline. So we wrapped up the trading session on Friday, sub the 19,300 mark. But it's interesting to note that, Nikunj, when we're mapping out all of this data in the last 22 weeks, the broader indices have fallen only twice.
Aman, look, in last 2 weeks, the market action has been 1 step forward, 2 steps back. But the global cues are strong, and you're getting a global support just at a point when Nifty has gone below key levels. So will global cues and will the global rally, in a sense, cement a comeback by the bulls? That's scenario number 1, that you find support at the key juncture, which is where you are because of global cues, not local tailwinds. Because of global tailwinds, you again go back to the upper end of the range. That's scenario number 1. Scenario number 2 is that India genuinely starts underperforming. So the underperformance, what we've seen in last 2 weeks, is real. It stays. FI, they continue to sell, and that will then start having a shadow impact on the broader market and the small and the mid cap stocks. Bear in mind that the small and the mid cap stocks have not cracked at all. The bank Nifty is down 5% from the recent high. The Nifty is down by about 3% from the recent high. So one of the scenarios will play out, which is that because the global cues are strong, Nifty is at the important support level. From these support levels, you may see a short, maybe you may see a short covering rally which could take Nifty to the upper end of the range, and broader market in a sense just maps what Nifty does. Second scenario, I've already outlined that India underperforms, and in that underperformance, sooner than later, small and mid-cap stocks, they get hit. I don't think we are in for a rara rally. I don't think we should even think about markets going back to 20,000 in the near term. But now I think for next 2 or 3 weeks, it would be all about India's outperformance and the real India's performance versus world, and how much more strength the mid and the small cap stocks will sustain.
Yeah, though you've got a big trigger coming in for one of the heavyweights, that's RIL. You've got the AGM today, and I think the commentary on geofinancial services, if there is any, the new energy business, telecom, and more importantly, further value unlocking in the retail business, I think that's something that the market is going to be keenly looking out for.
You know, it's never been that hectic for Reliance ahead of the AGM. Normally it's the AGM where the tone is normally set. Yeah. So for example, the AGM has been used in the past for the Jio launch. The AGM forum has been used in the past where Reliance came out and said that, look, we will make the company not net debt zero. AGM in the past has been used as a forum where Mr. Ambani has announced the gas discovery. So from a market standpoint, frankly, from this AGM, I don't think any grand announcement is expected. Reliance Jio financial listing has been done. The retail valuation, which were $50 billion a couple of years ago, after the latest round, they now stand at about $100 billion. New energy business that has been incubated. So until and unless there is a big surprise, which is completely unexpected, I think this AGM from a market standpoint may just be a neutral event. But everybody really wants to know that what the roadmap for the Jio financial services is, because that's the new kid on the block, so to speak, from the Reliance family. The stock after listing has not been off to a great start. It was a good Friday for Jio Financial Services, but otherwise it's been a week. The listing has not been great. So are you likely to see something very convincing in terms of a futuristic roadmap for Jio Financials? If that is the case, then the stock should stabilize. But in general, frankly, to expect something extraordinary from today's AGM, given that we've already had 2 big news flows for Reliance, I think would be a bit of a stretch. It really could be a routine event where it's business as usual, I guess.
Yeah, perhaps just, commentary on telecom, new energy, value unlocking, geofinancial. But as you said, they're not really setting the tone for any brand big new announcements. All of that will closely still be monitored. But let's move right on then and talk about stocks that have really been in the fast lane. And if we're mapping out the kind of year-to-date return that we've seen for some of these defense names and railway stocks, certainly, Nikunj, they have been blasting off, high speed, whatever you want to use to describe it.
Yeah, I mean, explosive, high speed, different avatar, high flying. This is the go-to space now. Now, you go to, so both these pockets, again, they have both very different factors which are at play. Railway capex is a very different capex. Defense outlets completely different. They both are not connected. But somehow in terms of market performance, they join at the hip. There are always exceptions within the railway space. There are always exceptions within the defense space. But I guess as a theme, look at Mazgaon Shipyard, Kochi Shipyard, HAL, BL, Bharat Dynamics. It's been an extraordinary another year for some of the defense stocks. Flip it around with railways, and you actually would see Titagarh Wagon 260% up, RVNL, IRFC, IRCTC. IRCT is a special situation, but in terms of the trajectory, I guess the price action is something which some would say is unrealistic to imagine, or was unrealistic to imagine at the beginning of the year. Now, why are we bringing this one out? The reason why I'm bringing this one out is that if you're frankly asking me that one space where I think there is a bit of a euphoria, there is a lot of excitement, and perhaps markets are pricing in FY26 and FY27 and FY28 earnings, I would say that would be defense and railways. While the long-term picture, which is the 3 to 5 year picture for some of the stocks, will sustain. But to imagine this kind of an outperformance which will sustain from these levels after the recent run-up at the current juncture, looking at the business dynamics and the fact that we have an election cycle in between, I think would be a stretch imagination. So I'm of the view that one is better off taking some profits off the table, because these are times where you definitely want to book 25 to 30% cash given that these levels, I think they will not sustain. One. B, I don't think the upside from these levels that these can be justified. So anything that cannot be justified, ultimately markets will equalize them. That's how mean reversion works. So I think these stocks are due for mean reversion. You should start booking profits in them, if not fully, partially.